I certainly understand that what you all have engaged in is what every good American business does, and that's tax planning. If you don't tax plan, then you're incompetent as an American business. But I do hope that I can understand better why the structure you've used has been embraced so that it will better inform our decisions and how to make it simpler and how we can support international growth for all of our companies that are American companies. You borrowed $17 billion and issued bonds and to pay dividends to your shareholders fairly recently. It was in the economic news because of your large cash reserves. So clearly you made a decision that it was going to be cheaper for you to service that debt and then use the cash to pay dividends than to bring any of this cash back. Do you have the analysis that would help us understand how much cheaper it was for you to borrow that money?
I can describe it at a broad level, Senator. The cost of capital today is at an all-time low, as you know. And so our weighted average cost for the borrowing that we just did was less than 2%. And we were faced with a decision to go that route or pay 35% to repatriate. And so as we looked at that analysis, we felt strongly that it was in the best interest of our shareholder for us to secure the debt.
Okay. Let's assume that we simplify this. Ireland gave you a 2% rate, which was negotiated for your company, correct?
We went to Ireland in 1980, and they were very much recruiting, I believe, technology companies at that time, and Apple was a small $100 million business that had no operations in Europe. And so there, as a part of recruiting us, the Irish government did give us a tax incentive agreement to enter there. And since then, we've built up a sizable operation there. Nearly 4,000 people. We're building a new site. We're continuing to grow. And the skills of our people there are very fundamental for understanding the European market and servicing our customers there, from tech support to sales to reseller support, et cetera. And so we have quite a very, very strong presence there.
I guess my question, Mr. Cook, is if Ireland recruited you back when you were a $100 million company and gave you a really good deal, how do we, if we're setting tax policy, how do we do it in a way that there's not going to be, I mean, correct me if I'm wrong, but I believe that probably 3/4 of net new mobile activity growth is going to be in emerging markets. Would you disagree with that percentage, that net new growth in markets in terms of mobile activity are going to be out there in emerging markets as opposed to Europe and North America?
I think a significant amount, I'm not sure the exact number, but I think a significant amount of growth will be in the emerging markets.
So I guess the point I'm trying to get to here is, let's assume we simplify our tax code. And let's assume that we get it down, we clear out all the underbrush, we take away some of the goodies in some sectors of our economy, we understand the reality of international moving of capital because of international economies and international trade. What keeps another country in one of these emerging markets from undercutting us once again like Ireland did back in '80?
I think the U.S. has such enormous advantages. And the barrier right now in terms of repatriating cash is that it's repatriated at the 35% level. And so our proposal, and I'm maybe a bit different than my peers here, is I'm not proposing zero. My proposal is that we eliminate all corporate tax expenditures, get to a very simple system, and have a reasonable tax on bringing money back from overseas. And I think if we did that, I think many companies would bring back capital to invest in the United States, and it would be great for the economy.
What about the other way? What would it cost you to move out of California and go to entirely to Ireland or to a country that is going to be, for example, China, if you get that deal with China Mobile soon, which I know you're working on, right? That's a big one, hopefully, that you get done. You've been working on it a while. What keeps you from, in terms of the relative cost analysis and the benefit analysis, what keeps you from moving out of California?
Well, we're an American company, and we're proud to be an American company. We do the vast majority of our R&D in California. And so we're there because we love it there, and this is where we can create and make things that people haven't even imagined yet. And
so it's an intangible? You're saying it's an intangible? It's not something that you can reduce to?
I'm saying it's who we are as people, and we are an American company. We're an American company whether we're selling in China or selling in Egypt or selling in Saudi Arabia. Wherever we are, we're always an American company. And so I have never thought, it has never entered my mind, honestly, Senator, of moving our California headquarters to another country. It's beyond my imagination, and I have a pretty wild imagination, but it's beyond it.
Do, on the money that, the corporate bonds you issued, do you think, and I'm not being judgmental about
Right.
you doing that, I understand the business rationale behind it in terms of the low cost of capital, but do you think you should be able to deduct the interest on those? Would that be one of the corporate expenditures we could do away with?
It could be one of the corporate expenditures to do away with. I think, the way the tax code is written currently, my understanding is it would be deductible. It would be a very, very small percentage of the overall that we pay. We paid $6 billion and at an effective rate of 30.5%. But yes, it's certainly one of the things that I think that this group should talk about in terms of doing comprehensive tax reform.
Okay, and this is kind of complicated, but somewhere along the way, you're deciding how to divide up sale proceeds as to where the money goes. And I know some of it depends on where the sale occurred, but some of it depends on a decision you're making internally about where you're going to allocate what you're getting for your intellectual property. Where is that decision being made, and what do you base it on in terms of how much money comes back to the American companies that are paying taxes versus how much is attributable to the international companies?
It's a good question. Today, everything that we sell in the U.S. is taxed in the U.S. For a foreign country, generally speaking, when we sell something in a foreign country, it's taxed in the local market. And then if it's one of the countries that are being served from Ireland, those units are generally sold by an Irish subsidiary. And so that income, if you will, is taxed to the degree it needs to be in the local jurisdiction. And then the proceeds move to an Irish sub, in most cases, or in many cases called AOI, which acts as a holding company and invests Apple's earnings. And then we pay taxes on those earnings in the United States.
So does any of the proceeds of the many thousands of dollars you've gotten from me over the years, do any of the proceeds of that actually get parked in Ireland or in any of the international companies under the aegis of intellectual property?
Maybe, I think Mr. Bullock can probably answer this better than I.
Thank you, Tim. The answer to that is no. 100% of the profits on any sale to a customer in the United States, whether it's through the channels or through our online stores, all of that's fully taxed in the U.S.
Okay.
There's no outbound payments going offshore.
Okay, thank you.
Thank you.
Thank you very much, Senator McCaskill. Senator Johnson.
Thank you, Mr. Chairman. Let me kind of pick up where Senator McCaskill left off there. This is complex, and it has to do with how do you allocate income, what kind of transfer price is an appropriate price. I did notice that your U.S. sales are about 39% of your total sales. International is about 61%. So U.S. sales about 39%, and you had income about 35% in the U.S. International sales 61%, and about 65% of income. Can you just explain that? I mean, that's pretty close. I mean, if I were taking a look at that, you're getting pretty darn close, I would think, to pretty proper allocation between sales and income. Can you just explain that disparity?
Sure, Senator, and I'll make some comments, then pass it to Peter. You may be able to add something. Generally, Apple's Macintosh business is a larger percentage of its sales in the U.S. than internationally. As we launched the iPhone became a larger percentage of our international business than it did a part of our U.S. business, because we had this nice base of Macintosh sales in the U.S. The iPhone, generally speaking, has higher gross margins than our Macintosh business. So it's logical that the international business generally would carry higher margins than our domestic business. And Peter may be able to add something to this.
But basically, to summarize, that you have a more profitable product mix internationally than you have in the U.S.
That's correct.
That pretty well explains that difference.
It does.
I was talking earlier about who's the beneficiaries of your very good tax rates overseas. I would point out, I think this is true, that if we ever do tax reform, if we ever do incentivize companies to start bringing some of that money back home, the way current tax law is written is you get a deduction for foreign taxes paid, correct, Mr. Bullock?
That's correct. It's actually a credit, dollar-for-dollar credit to the extent you pay foreign taxes.
So as a result, if now Apple has a lot more money that when you repatriate it, we'll be able to tax more of it, correct? So the U.S. government, you could argue, will be a net beneficiary if we ever get our tax house in order.
To the extent of repatriation in one form or another, if it's taxable, yes, that would yield more U.S. tax.
Mr. Bullock, I would imagine you probably know this better than anybody. Because you're a large corporation, my guess is you have full-time IRS agents stationed in your operation, basically doing a full-time audit nonstop. Is that pretty accurate?
That's correct. We're under audit in a number of jurisdictions around the world, including the U.S., not unlike many of our multinational peers.
And they're looking at all this corporate structure, they're looking at all the transfer prices, and they're basically giving you the nod saying that you're following tax law.
They look at it in detail, yes.
Okay. Mr. Cook, again, talking about who are the beneficiaries of your, not only your excellent products, but also just your low tax rates and corporate profit, that would be shareholders. Can you describe your shareholders, I mean, in general?
I think Peter can probably add more to this, but generally Apple is very widely owned because it's a part of the underlying indexes in the stock market, and a number of mutual funds own us in addition to pension funds. Peter?
Yes, Senator. Roughly our top 50 shareholders own about half the company, and these include public employee retirement systems, mutual funds such as Fidelity or PIMCO or BlackRock, where people are saving for their retirements. And we also have individual retail shareholders as well.
So again, even the top 50% is widely dispersed, and those are large funds that also have very diverse shareholder base.
Absolutely,
in those funds.
absolutely.
So again, those folks benefit from the fact that Apple is able to retain more of its profit by not paying out taxes to foreign governments.
Yes, and they also receive our dividends.
In addition to U.S. and state income taxes, what other taxes in the U.S. does Apple basically generate? What could you almost take credit for?
Last year, we paid more than $325 million in federal employment taxes that Apple paid, in addition to our employees. And we've paid, over the last couple of years, I think nearly $100 million to state and local governments and property taxes and various other fees. And I believe last year we collected and remitted and paid approximately $1.5 billion in sales tax.
So that's getting close to about $2 billion in total, Mr. Bullock.
Just to clarify that a little bit, it was a little over $1.3 billion in sales and use tax.
When we were talking about transfer pricing and allocation of income, you face the same dilemma between states, don't you? in terms of which state claims how much income when you're paying those state income taxes?
Well, the income that the company generates in the U.S., the approximate 40% that you alluded to earlier of our total global profits, which is relatively commensurate with our U.S. customer base, that income does get apportioned around and divvied up amongst the states under a slightly different system, but it does get allocated out to the states.
So can you just tell me what is the basis of that allocation, and how would that differ really from trying to allocate income between different countries?
Well, that too varies by state. Some states apportion based on relative sales, sales to customers in that state over total sales domestically. Some states use a multi-factor test. They may look to sales, property, and payroll.
Do you end up having to negotiate between the states in terms of who gets to claim what percentage of your income? Do you end up paying more? Do you have more of your income allocated to pay state income tax than you actually, in other words, more than 100%?
It's not over 100%, but it is approximately 100%. So in our fact pattern, it's not double taxed, which would be the case if more than 100% of the income was apportioned, but it does approximate 100%.
But again, that's a similar type of problem you have trying to allocate income between different countries, isn't it?
If you had different states apportion in different ways, yes.
Can you tell me a little bit about the taxes you pay to foreign countries? Is that income tax? Are those sales taxes? Is it property taxes? Is it a combination of all those? And can you give me some sort of relative amount? Well,
there's a combination. Last year, in fiscal 12, the company paid a little over $900 million in international income taxes around the world. We're projecting that number to be larger this year. And that number is significantly larger than it was a few years ago. In addition to that, I don't have the statistics available, but I would imagine similar to in the U.S., there are employer contributions for payroll tax for employees outside of the United States, and there's a considerable amount of VAT and GST that gets collected and remitted by the company to various countries around the world.
Of your total worldwide employment, how much is based in the U.S., how much is based overseas?
About 50,000 of our 75,000 employees are here in the United States.
So even though 60% of your sales are overseas, what percentage is that? It's almost two-thirds of
Yes.
your employment is here in the States.
And that's also influenced by our retail stores. Of our approximately a little over 400 retail stores, about 260 of them are here, and that influences it.
Okay. Thank you for your testimony, and thank you, Mr. Chairman.
Thank you very much, Senator Johnson. Senator Ayotte.
Thank you, Mr. Chairman. I want to thank the witnesses for being here today. Mr. Cook, is there any dispute at this hearing that Apple has complied with our tax laws?
I've heard no dispute of that.
One of the issues that I heard raised when you were being asked questions by Senator McCaskill about the issue of the $102 billion that is present overseas that you have now is this idea of repatriation. You had said that you'd be willing to pay some rate on repatriation. As we look at tax reform, what do you think is the rate, thinking not only of Apple, but of multinational corporations around the world? If we do tax reform, and let's say we simplify the code so deductions are eliminated, and then we take that and pour that into reducing the rate, what rate do you think we have to be at if we want to be competitive in terms of making sure that we have investment here?
I think the rate on the U.S. sales, in my judgment, from most of the studies I've seen, would indicate it would need to be in the mid-20s as all of the expenditures are dropped out. I think in terms of a rate on bringing back foreign earnings, I think to incent a huge number of companies to do that, it would need to be a single-digit number. And I think by doing that, you wind up in a revenue-neutral kind of situation, which means some companies may pay a bit more, and I think we would be one of those. Other companies would pay less. But I think more important than all of the tax, it would be great for growth in this country. And so that's the reason I feel so adamant about doing this.
What would it do? No, so as I understand it, so let's say you're building a data center here, you're building a new facility here. Right now, that money you have parked overseas, you can't use that to invest in plant facilities here. Is that right?
That's correct. We can't use our overseas cash to make any investments in the United States.
If you were in our position and thinking about tax policy and making sure that our country remains competitive, how important do you think it is that we change the tax code to ensure that this remains a good place for investment, assuming, I understand there are many other advantages to being here, including intellectual property advantages, et cetera, but you're not the only corporation that has significant monies overseas right now that we would like to see come back here. What do you think that would do in terms of our economy? I think you've touched on it.
I think it's vital to do. I think it's great for America to do. I think it would, we would have a much stronger economy if we did that. I think it would create jobs and increase investment. And so I put my whole weight and force behind it.
And if we create more jobs and increase investment, isn't that more taxes that can be collected here as well in terms of thinking about, you know, the fiscal state of the country?
It is, and I think that's a very excellent point, is that all ships rise with a tide.
Right. Especially with where our unemployment rate is right now. I wanted to ask you about the issue of thinking about, as we do tax reform, the issue of a territorial rate. How important is it that as we go forward, hopefully we will on a bipartisan basis, to reform the code, to really create a better dynamic, simpler, lower rates for investment here, that a component of that be a territorial rate? Because there's been some discussion around here about not having a territorial rate.
I think that the U.S. is advantaged if more capital moves into the country, because I think it would really strengthen our economy significantly. And so I think there has to be, I don't propose zero, I think it has to be a reasonable tax on doing so. And some people refer to that as territorial, some people refer to that as hybrid. I've heard different terminology for it, but that's how I believe it should work. Apple does not support a temporary tax holiday. We think that the tax code needs to be comprehensively reformed for a long period of time.
If we create a temporary tax holiday, which we have done in the past, don't we just perpetuate the situation, meaning it may have a short term, but it doesn't encourage long-term investment?
I think it's very important for business to be predictable, and a permanent change to me is materially better than a short-term tax holiday.
I actually have a question on an unrelated topic, and to the tax issue today. But can you tell us, when you think about, you were talking to Senator McCaskill, you talked about the advantages, for example, of being in this country. One of them I view very significantly is, of course, the intellectual property protections of this country, which I know are very significant to you as a technology company. You have faced significant challenges in China. So what would be, can you tell me what those challenges are? And thinking about intellectual property protection certainly is an advantage that the United States has. How do we address this with our international partners?
We've actually faced more significant areas in other countries other than China.
The reason I raised China is I've heard the stories about the knockoff Apple stores, but please speak to other countries as well.
Yeah, that has been an issue. That has clearly been an issue. I think that the U.S. court system is currently structured in such a way that it's very difficult to get the protection a technology company needs because our cycles are very fast. And when the cycles are very fast and the court system is very long, the foreign competitors or even competitors in the United States can quickly take certain IP and use it and ship products with it and they're on to the next product before the court system rules. And so I actually think that we require much more work on IP in this country as well. And I would love to see conversations between countries to try to strengthen IP protection globally. I don't know how likely that is to occur in the current environment, but for us, our intellectual property is so important to our company, and I would love the system to be strengthened in order to protect it.
I thank all of you for being here. Appreciate it.
Thank you very much.
Thank you, Senator Ayotte. Senator Portman.
Thank you, Mr. Chairman. I appreciate the opportunity, having just left the Finance Committee hearing on the IRS, to talk about tax reform and not just tax administration. Look, this hearing is important because it's talking about a specific provision of our international tax rules that allows U.S. companies to effectively take IP rights created here in the U.S. to foreign jurisdictions. Some of it's by means of cost sharing, some of it's through other agreements. I agree with you, Mr. Chairman, and the ranking member that we need to address this issue. I totally disagree that we ought to do it through picking out specific tax loopholes or tax preferences. We got to reform this code, and if we don't do that, our companies will continue to be uncompetitive. You think about it, we have an uncompetitive tax system now. We're competing with one hand tied behind our back, and if we're going in and taking away certain preferences, it may make us feel better about getting more of this IP income back here, but in effect, it makes our companies even less competitive and hurts U.S. employment. So that's why we got to do tax reform. We have to do it now. We're now living with an international tax code that's a relic of the 1960s. It wasn't even reformed in 1986 when the rate was lowered to 34%, now 35%. So we're looking at several decades now of tax policy that really is antiquated and doesn't keep up with the times. So I have a proposal to do that. It's been scored by the Joint Committee on Taxation. It's revenue neutral. It's a 25% rate with a territorial system. There are other ideas out there. The President's talked about it. He has said in his February 2012 white paper he believes the rate ought to be lowered and ought to be reinvested when you get rid of these tax preferences in lowering that rate. So there's a lot of commonality now between where Senator Baucus is, Senator Hatch is, and where Congressman Camp and the Ways and Means Committee and the Finance Committee are working together on this. So that's the way to approach it. 80% of our world's purchasing power now lies beyond our borders. And so a key strategy to grow jobs here at home is by tapping into that. And that's what Apple does. That's what a lot of companies in the United States do. We want them to do that. It's also where our international tax code puts our workers at a disadvantage and puts our companies at a disadvantage. Because when you're operating overseas, you pay the tax rate of the company you're operating in, plus you pay the residual U.S. tax when that income is brought home. Yeah, there's a tax credit. In some jurisdictions, like Ireland, the tax is so low that you don't get much of a credit. But it's also incredibly complicated to go through that process. And so, in effect, it puts us, again, in a non-competitive position. Almost all of our industrial competitors, by the way, have shifted to a territorial-type system. That includes the UK, it includes France, it includes Germany, it includes Japan. In fact, when you look at the OECD, we now have 26 of our 35 fellow OECD countries have moved to this dividend exemption system, which is a specific kind of territorial system. Congressman Camp's talked about that. I think that's the right way to go. Essentially, they don't tax active business income earned beyond their borders, and their businesses are a lot more competitive internationally as a result. So the U.S. penalty for repatriating earnings has resulted in somewhere, Mr. Chairman, between $1.5 and $2 trillion being locked up overseas. That means that money is starting to be deployed for R&D overseas, for putting factories overseas that otherwise could be here. And so I think we got to move, and we got to move very quickly. No other nation in the world imposes such a high barrier to bringing foreign earnings home as the United States. No other one. And by the way, every one of our global competitors have reformed their tax code since we have back in 1986. Every one of them. Their corporate tax code and their international tax codes have all been reformed. They've not just lowered their rates. Canada just lowered theirs from 16.5% to 15%. And our rate, as you know, is the highest in the world. But they've reformed the code to make it more competitive for their companies. So we've got to do this. If we don't, we're going to continue to lose opportunities. And I think our guiding principle should be, how do we create competitiveness so we can win customers overseas? tightening rules related to sourcing of IP income, as, again, Chairman Camp has proposed, and as my plan would do, is important to do. But let's do it in the context of a comprehensive proposal. I note Mr. Oppenheimer and Mr. Cook wants to answer that you all do a lot of sales overseas. I think I just heard from Senator Johnson, 65% of your revenues overseas, about 60% of your business is overseas now. Is that accurate?
Yes, sir, that's accurate. About 2/3 last quarter were overseas.
And how many U.S. jobs does that represent? In other words, how many jobs in the United States of America are in the U.S. because they support your foreign sales?
In total, we have created or support 600,000 U.S. jobs. It's difficult to allocate a certain percentage of those for the international business. But I would say it's significant. We're able to invest a lot more because we sell our products around the world.
It'd be tens of thousands of jobs in the United States that are here because of your sales overseas, right?
Our earnings overseas have powered our company, yes.
Yeah. I would suggest you come up with that number. I know it's not easy, but it's probably 40% of your workforce, something like that, in the United States. And it's a huge boon to us. Again, we want you to sell stuff overseas because it creates jobs in America. Would it be fair to say that your biggest competitor globally is Samsung?
They are certainly one of the, yes.
Well, so Samsung would be a major competitor?
Yes, sir.
And is Samsung an American company?
Korean company.
They're headquartered in South Korea that has a top corporate tax rate of 24%, which is 15 points lower than the U.S. corporate tax rate of 39.5%, which is our combined state and federal. So they have a lower tax rate there. Based on public financial statements for both those companies, my staff tells me it appears that Apple and Samsung actually pay about the same global effective tax rates, at least they did last year. And this is just looking at public documents. Global's tax payments were about $7.7 billion out of $56 billion in global pre-tax earnings. Samsung's global tax payments were about $4 billion out of $28 billion in global pre-tax earnings. It comes out to a global rate of about 14%, the same for both companies. Mr. Bullock, is that consistent with your estimate of Apple's rate and what you know about Samsung's rate?
Senator, yes, that was Apple's global cash tax rate last year. We believe it will be actually a few points higher this year.
Okay. Well, let's be conservative and say that it's going to be the same. So it sounds like all the tax planning discussed at the hearing today ultimately resulted last year in nothing more than the same global tax rate as your main foreign competitor. Is that accurate?
Yes, that
Yes,
sounds like it.
Senator, yes, with one difference. Samsung is able to freely move its capital back.
I'm getting to that. I'm getting to that. You're ahead of me, Mr. Oppenheimer. Yeah. So I would say the answer is it's worse for Apple because they can't bring their money home. And
Yes.
you think about that. So it's partly the rate, but it's partly the fact that they can't bring it home at 35%. So their investment options are a lot more limited, aren't they? Your investment options are a lot more limited. How much money does Apple spend on tax compliance efforts to go through all this, the rigmarole we talked about earlier?
I don't have the exact figure, but it's a lot.
Again, I'd suggest you get that number. I think the American people would like to know how broken our tax system is. I mean, I'm a recovering lawyer myself, but you don't need more tax lawyers. You need more engineers. You need more innovators. You need people to keep America on the cutting edge. And, you know, your products are great already, but they could be even greater if you had fewer lawyers and more engineers, probably. How big is your tax department?
It's approximately 3 dozen people around the world, and we have a couple of dozen additional resources through our shared service centers in Cork and Austin, Singapore, and we do have some personnel in Shanghai and
And I imagine
Brazil.
it's a lot more than 3 dozen plus those folks because you hire a lot of law firms, too.
Well, yes, there's a lot of outside help as well, and
Yeah.
if you could encourage Peter to help me out with more people, that would be appreciated.
Yeah.
Senator, I would
we
add.
want to have fewer people. We want to reform this tax code so you don't have to mess with all this stuff. Go ahead, sorry.
I would add, if I could, that the tax return that I sign each year in the United States is 2 feet tall or greater, and we are under continuous examination. And much of the effort that Phil spoke about, both internally and particularly with our outside advisors, deals with continuous examination. So we would very much support a simplified code that would lead to a smaller tax return.
So you've got high tax compliance costs. You can't bring your money home, so you can't invest it where you want to. Let me ask you this. What would it do to Apple's ability to compete successfully with Samsung if Congress effectively hiked the tax rate on your international earnings without doing anything to modernize the tax code so that you could move to a dividend exemption system or some other modernized system?
It would
Mr. Oppenheimer.
be very bad, sir.
Would not be helpful.
And that's essentially what some are advocating here today. Would you like to be able to cut your tax compliance costs and invest more of that in some productive uses?
Yes, definitely.
With no offense to Mr. Bullock. Well, let me just summarize by saying, look, I appreciate the hearing today. None of us would design a tax code that has a company like Apple engaging in these costly, complex tax planning efforts, not to achieve some windfall, as the subcommittee report suggested to me, but rather to achieve parity in a roughly level playing field with its foreign competitors, not including, again, this cost of compliance and not including the disadvantage of not being able to bring the money home. It's an antiquated, complex, needlessly complex, in my view, tax system. So I don't think the solution is to tinker at the margins or go backwards toward a worldwide system that makes it even harder to compete. I think we should take the President up on his offer to do corporate tax reform. He says he wants to do it. Chairman of the Ways and Means Committee, Chairman of the Finance Committee say they want to do it. It's bipartisan. And I hope this hearing will help us to move toward that goal. Thank you, Mr. Chairman.
Thank you very much, Senator Portman. Let me just first of all say, of course, you can bring the profits home. You bring the profits home from South America, don't you?
Do we bring the profits home from South America? I don't know the answer.
Well, you haven't transferred your intellectual property for that geography, have you? It's just for the rest of the world, other than the Americas. Isn't that correct?
The economic transfer for Europe is in Ireland, yes.
Yeah, but I'm saying that you bring the profits home from your sales in South America, don't you?
I would guess there's some cash in South America. I don't know, sir.
Well,
I would.
Your transfer agreement relative to the intellectual property is the rest of the world outside of the Americas. Is that correct, Mr. Bullock?
Yes, that's correct.
All right. So the other parts of the world that are not covered by that transfer of intellectual property, which is the creator of profits, that's your golden goose. And you shifted that golden goose, except for the Americas, to Ireland. You shifted it to 3 companies that don't pay taxes in Ireland, okay? They don't even exist for tax-paying purposes in terms of income tax. You shifted your intellectual property there. That's your choice. You did that in a transfer price agreement. You didn't shift the intellectual property, however, as I understand it, to as far as sales in the Americas is concerned. Is that right, Mr. Bullock?
The economic rights to
Economic rights, that's the right. But shorthand, the economic rights to that intellectual property was not transferred as far as the Americas is concerned. Is that right?
Mr. Chairman, the economic rights to the intellectual property for distribution in the Americas is owned by Apple Inc. The intellectual rights for distribution in Europe and Asia Pacific are owned by ASI and AOE as a result of the cost-sharing arrangement.
All right. So to answer my question directly, they were not transferred as far as the Americas are concerned. Is that correct? They belong to the home company, Apple Inc. Is that correct?
That is correct. Apple Inc.
So the profits that result in the Americas outside of the United States, you paying income taxes on here. Is that correct? You're bringing them back here to the United States. Is that correct, as far as the Americas are concerned?
There's a selling profit in both Canada and in Brazil and in Mexico. And yes, any residual profit is subject to U.S. tax in full.
All right. So you're bringing those profits home.
I would characterize it as Apple Inc. is generating those profits.
Well, they're generating the profits through its intellectual property in Europe and Asia, too. I'm just talking about the profits in those countries are brought home. Is that correct? In Canada, Mexico, the ones you just mentioned, they're brought home.
I would characterize it as those profits are generated by the U.S. company. So I would not say that they're brought home. I would say that they're earned by Apple Inc.
Apple Inc. keeps those economic rights, right?
It has, yes.
And it's chosen not to keep the economic rights for the rest of the world. Is that right?
Via a co-funding arrangement since 1980,
Right.
yes.
Which it controls. Is that right? I mean, that agreement is an Apple agreement. People who signed it all work for Apple, right?
It's between 2 related parties,
I
yes.
understand, but they all work for Apple, don't they? Is there any doubt in your mind that Apple controls that agreement and could write that agreement the way it wants to write it? Apple Inc.?
Well, I don't think that's the standard. The standard is, would parties at arm's length enter into that type
Is
of
that an
arrangement?
arm's length agreement? Are you suggesting that agreement is an arm's length agreement when Apple are the signatories?
I would, yes. It's evidenced by parties at arm's length enter into joint development arrangements all the time.
Who signed that agreement? 3 parties, right?
Parties at arm's length enter into joint development arrangements all the time. The U.S. Treasury Department on 3 separate occasions, and even the U.S. Congress, have approved cost sharing as
understand.
evidenced by arm's length behavior.
I'm just asking you, was Apple in control, Apple Inc.'s employees in control of that agreement? It's a very simple question.
Chairman, I
Do they
don't-
all work for Apple Inc.?
They all do. They all work for Apple Inc.
Okay.
Senator, may I add some context,
No, I
please?
think we ought to be able to try to get a straight answer on this. In terms of this so-called cost share agreement, which shifted the economic rights to intellectual property, shifted the economic rights. These are the crown jewels of Apple Inc. They were shifted to these Irish companies in an agreement signed by 3 people, all of whom work for Apple. That's factually the case. If that's not, say I'm wrong. Now,
I would
You
disagree
signed
with
it.
your characterization.
I disagree with your characterization.
did you sign the agreement in 2008, didn't you?
Yes, but I think there's some
Don't
very...
you work for Apple?
I do, but I think there's some very important context.
Okay,
that
well,
needs
you
to
can
be
give the
added.
context in a minute, but I want to get the facts out, and then we'll call on you for the context. Mr. Cook, you signed that agreement, did you not, in 2008?
I signed the 2008 agreement, yes.
Right, and you were working for Apple at that time?
I've been working for Apple for 15 years, sir.
And the other person who signed it, I believe, was Mr. Wilpfer, is that correct, in 2008, who was the treasurer for Apple?
I'm not sure. I don't have the agreement in front of me.
Okay, do you know Mr. Oppenheimer?
Yes, he's our treasurer.
He was then.
Yes.
3 people working for Apple signed this agreement. This agreement shifted the economic rights in your crown jewels to 3 Irish companies that you own and control.
Senator,
now,
I
wait a minute.
respectfully disagree with
But you
that
already said you
characterization.
own and control them earlier this morning. Let me just finish my question. If you don't agree that you own and control them, you can stop me. But you agreed earlier this morning you do own and control those corporations. So I'm relying on your testimony that you own and control those corporations. So now you transfer, you shift. And by the way, when you said you shifted nothing, Mr. Cook, I couldn't agree with you. Couldn't disagree with you more. Of course you shifted something, the most valuable thing you have, the economic rights in your intellectual property. You shifted to those 3 companies in an agreement. I'm not saying it was legal or illegal. I'm simply saying you shifted the economic rights to the most valuable thing you own, intellectual property, the thing that produces the profits. You shifted to those 3 Irish corporations which you own. Now the profits, about 70% of the profits worldwide now end up with those 3 Irish corporations. That's the facts. And now those profits are abroad. And when one of my colleagues says you can't bring them home, of course you can bring it home. If you'll pay the tax on it, that would be owing on them if you brought them home. Of course you can bring them home. You bring home the profits from Mexico and Canada and South America. The only reason you're not bringing them home is because they were transferred to the companies in these 3 Irish companies. That's the reason why they're there. It's your judgment, your decision. I'm not saying you're making the wrong decision. It's your decision not to bring those profits home. And so $100 billion plus is now stashed away in these 3 Irish companies that you control, but nonetheless it's in their legal name. And the question is, will you bring them home? You've told us in one place, I believe, Mr. Cook, that you do not intend to bring those monies home unless our tax rates are reduced. I believe that's what you told our staff. Is that correct? You're not going to bring that money home unless we reduce our tax rates. Is that accurate as to what you told our staff?
Senator, there's a lot there. I'd appreciate being able
You
to
can, but I just want to ask you that one question. Is it true you told our staff you're not bringing the $100 billion home unless we reduce our tax rates? Is that accurate?
I don't remember saying that.
Is it true?
I said I don't remember saying.
No, I'm saying, is it true that you're not going to bring them home unless we reduce our tax rates?
I have no current plan to bring them back at the current tax rate.
All right. Is that the
Whether I
same
would-
way as saying unless we reduce our tax rates, you're not bringing them home? Is
No,
that the same way?
No, I don't think it's the same, sir.
How's it different?
Your comment sounds like it's forever, and I'm not projecting what I'm going to do forever because I have no idea how the world may change.
You're not, it's not your intent to bring them home unless we reduce our tax rates. Is that correct? Is that correct?
I have no current plan to do so at the current tax rates.
Okay. So that, here's where we're at. Here's the situation. You've got an agreement which shifts the economic rights into the most valuable thing you have to 3 Irish companies that pay no taxes. That's the shift. That's the golden goose right there. That's your crown jewels. That's your intellectual property. You have a right to do that just the way you had a right not to shift that intellectual property for Mexico, Canada, and South America. You decided not to do it there. You're going to pay Apple Inc. is going to pay the taxes on the income for all the parts of the world except for where 2/3 of the profits are created roughly, and that's by the rest of the world that you have transferred the economic rights to. So, okay, here's where we're at. Here's where we're at. You've got profits going now. We've got $100 billion in profits that are sitting there that you say it's your current intent. You're not going to pay your taxes on them because you don't think you need to pay taxes on those because the taxes were shifted, as we have indicated. The economic value has been shifted, and therefore there's...
Senator, I must say, we don't agree with the characterization.
That the economic rights to your intellectual property was shifted to those 3 companies? You don't agree with that?
We don't.
Oh, okay. What was shifted to them?
You want me to?
Senator,
Well, what was shifted to them in that agreement that the 3 people signed, all of whom work for Apple Inc.?
Well,
What was
Senator,
shifted?
it began in 1980.
I know that. I'm talking about 2009. The most.
Yeah, but Senator, it began in 1980. and
We've been
it's
through that
fundamentally-
history. We've
It's
been through
been
the history.
fundamentally not changed since 1980. And I think there's some very important context that gets to the essence of the agreement that began over 30 years ago.
I understand, but I want to talk about the agreement signed in 2008 and 2009. There was an agreement signed in 2008 and 2009. You signed that agreement in 2008. 3 Apple employees signed that agreement in 2008. That agreement did 2 things. It shifted the economic rights the way they had been shifted before 30 years ago. It continued to shift the economic rights to 3 Irish companies under your control that don't pay taxes in the United States.
Senator, I respectfully disagree
Okay.
with that.
It didn't shift the economic rights?
No, I don't. That's not the way I would characterize it.
What did it shift?
What it did, beginning in 1980.
Did it shift it?
What it did, beginning in
Let's start in
1980.
2000.
and
I'm
it's
sorry,
continued.
Mr. Oppenheimer. You've gone through the 1980. I want to talk about the 2008 and 2009 agreements. Did it shift anything? Did it give rights to those 3 Irish companies? Did they get any rights in those 3
It was a
agreements?
continuation of the same rights they've had for 30 years that they have co-funded.
Real good. Now, in 2008, you continued under Apple's control, totally under Apple's control. I don't think we ought to kid ourselves about that. Under Apple's control in 2008 and 2009, there is an agreement that is reached, so-called, with a controlled corporation, which you folks have agreed this morning you control. And under that agreement, which continues an earlier arrangement, it could have been changed. You didn't have to shift the profits in 2008. You didn't have to shift your intellectual property, the economic benefits in 2008 and 2009. You're in control. It's your company. You're signatories. You made a decision to do it. You had a right to make a decision, but don't kid ourselves as to the implications of what this means in terms of America's revenue. Apple makes this shift again, I'm not saying it's illegal. I'm not saying it's legal. I'm saying you made a decision to shift most of your crown jewels in terms of economic value and rights that creates the profits, which are so massive. You made that decision to continue that arrangement in 2008 and 2009. Okay. Now,
So we did that
yeah.
beginning in 1980, and that's the way we set up Apple. We went to Ireland when we first wanted to begin to sell
I
computers
understand.
overseas.
But we heard that this
And we've-
morning. I understand
We've
that.
continued to do that for the last 30 years. We've built up a lot of skills. Our systems are set up that way. Our processes are set up that way. Our operations are, and that's why we do it today.
And
It's been unchanged for over 30 years.
That the result of continuing that in 2008 and 2009 is most of your profits worldwide are now in 3 Irish companies that you control that don't pay taxes. That's the result of what you do in 2008. I know the origin.
Thankfully, customers around the world love the iPhone and the iPad, and they're buying them.
We love the iPhone and the iPad.
And so do people around the world, and they're
People around
buying
the world,
them, and
people
we're
in
selling a
Mexico
lot.
and Canada love the iPhone and the iPad. I got one right here. My granddaughter even knows how to use it. All of it.
Thank you.
It's a terrific instrument. That's not the question. People love it in Canada and in Mexico and in South America. But that intellectual property wasn't transferred there.
And it's because it's the way we set ourselves
I-
up over 30 years ago. We have not changed.
I understand. As a result of the continuation of that process in 2008 and 2009, most of your profits that come from this brilliant intellectual property, which everybody that I know of applauds, the continuation of that system means that most of your profits worldwide are sitting in 3 Irish companies that you control that don't pay taxes. That's the result, okay? You can defend it, but that's the result. And folks, there's a huge drain as a result. You point out, and accurately so, Mr. Cook, that 95% of the creativity that goes into those products is in California, but 2/3 of the profits are in Ireland. And you've made a decision, which you have a right to do, not to bring that money home.
Senator, we're proud that all of our R&D, or the vast majority of it, is in the United States.
I know, but the profits that result from it are sitting in Ireland in a corporations that you control that don't pay taxes. You ought to be
All of
proud.
the profits from all of the products we sell in the United States.
I know
pay
that.
taxes in the United States.
Oh, I know that. And all the profits that you make from your products that are sold in Canada are taxed in the United States. And all of the profits that are sold, that are produced from products that you sell in Mexico and Argentina and South America, all of those profits you pay taxes on in the United States. But you made a decision. You signed an agreement that continues an earlier agreement. You signed 2 agreements in 2008 and 2009. And in those 2 agreements, you continued to shift most of your crown jewels in terms of economic value. You continued that arrangement with the result that most of your profits worldwide are not taxed. You're an American company. You're proud of it. We're proud of you being an American company. We're glad you're where you're at. But the result of these arrangements that you've continued is that most of your profit is now where we've described all morning, in Ireland, in these companies that don't exist anywhere except on the water. Now, of course we got to change it. Of course we got to change this system. But in order to change it, we got to understand it, not deny it. We got to understand what is going on. And what is going on is a huge loss of revenue to the United States because we've got these corporations, and you're the biggest one, that are able to shift profits to places where you, an American company, don't pay income tax on it. That's where we're at. And we better understand that if we're going to correct it. And that's our purpose here today, is to shed a light on that. And so I hope that purpose has been achieved. We can't continue a system. We cannot continue, and I say this from the bottom of my heart, we can't continue a system where the company, a multinational company, is phenomenally successful as yours, and deservedly so, can make a decision sitting down in 2008 and 2009 as to where the profits are going to flow. An American company where the R&D is 95% in the United States. You created it. I won't say we, you created it. You had some real benefits, by the way, in doing that. You had R&D tax credits. You've got all the benefits of living in this country. You got the protection of patents. So with all of that, you're sitting there unilaterally deciding in 2008 and 2009 whether to continue a system where profits are shifted to a place where they are not available to the American taxman. And everyone agrees apparently we got to change this system. I hope everybody agrees to that. How we do it, we may not agree to. But in order for us to change this system, we got to understand what is going on, which is that you make a unilateral decision. 3 Apple employees in 2008 and 2009 essentially decided where these profits are going to be taxed or non-taxed. Folks, it's not right. That is not right. To leave that decision, it seems to me, the way it is decided so unilaterally, that a company can shift its value to a place, to a tax haven, which is what Ireland is. I hope I know it's your intention here, and I applaud you for your constructive view. I do. I know it's not easy to come in front of a spotlight. We understand that. But it's important for us that have to write the laws. And you agreed, Mr. Cook and your colleagues there, that we got to rewrite these laws. It's important for us that we know what's going on if we're going to change it in a sensible way. And so we're going to move to our third panel. And I want to, again, thank you, all of you, and I want to commend your company for the great work that you produce. With that, we're going to move to our third panel. Thank you.
Thank you, Mr. Chairman.